Hey there you. Yeah, you, the one staring at your portfolio wondering if Nvidia's about to make or break your month. Let's cut right to it. If you're betting on Nvidia right now, the costly mistake is getting distracted by backward-looking beats instead of the forward guide that sets the stock's next leg. Look, if you're short on time or simply don't want to spend time listening to a random guy hiding his face on YouTube, here's my 2 cents for you today. Just watch for Nvidia's third quarter revenue guidance. If it's below $53 billion, it could mean demand is cooling faster than expected, and you might want to trim your position before the market overreacts. Alright, welcome back. Or welcome for the first time, really. I'm DataCat. You know, I used to be just another analyst buried in spreadsheets at a Fortune 50 company, crunching numbers while dreaming of something less corporate. Traded that grind for, well, lasers and keyboards, chasing red dots and typing up insights like this. I'm no guru, just an introvert who saw enough boardroom drama to know what's worth sharing. Oh yes, I did saw that comment about me sometimes sounding robotic. Well, I guess that's how an Asian introvert usually sounds. I'm still figuring that part out. Anyways, if you are new here, this channel is just over 1 month old. If you want concise, evidence-based breakdowns before big prints, tap subscribe and drop a like so this reaches one more investor who is tired of noise. I'm not really here to brag or sell you a course. I just got tired of seeing the same old narratives get pushed on retail investors. I figured I'd share what I learned from being on the inside. So, back to business. Let's talk about why that one number, the third quarter revenue guidance, is so critical. First, we have to understand that in Wall Street, there's this unspoken rule for a company like Nvidia. It's called a beat and raise. It is not enough for them to just meet expectations for the quarter they're reporting on. That's already priced in. Everyone expects them to do well. They also have to raise their forecast for the next quarter. It's the market's way of saying, that's great, but what are you doing for me next? A little demanding, right? It reminds me of my cat, or any cats really, who will meow for food approximately 2 minutes after I just filled his bowl. The general expectation, the consensus for this quarter they're about to report, is for revenue of about $46 billion. They'll probably hit that, maybe even beat it slightly. But the number to watch, the one that will dictate the story, is the guidance for the third quarter. Right now, the average analyst forecast is for about $52.7 billion. But here's what the big firms are really looking for. That number, it won't be good enough to impress anyone. The whisper number, the one that will actually get the market excited, is closer to $54 or even $55 billion. If Nvidia's CEO gets on that conference call and guides for $54 billion or more, it sends a powerful signal. It says their new, incredibly powerful Blackwell chips are ramping up smoothly, and that the giant tech companies, the hyperscalers, are still buying every single chip they can possibly produce. And a huge part of hitting that $54 or $55 billion number comes down to the details of their Blackwell ramp. What investors want to hear is confirmation that the only thing holding them back is how fast they can make the chips, not a lack of customers wanting to buy them. It's a classic supply versus demand story. But it's not just about the individual chips anymore. You'll hear them talk about things like NVLink, NVSwitch, and especially the NVL72 systems. Think of it this way. Selling a single chip is like selling a high-performance engine. Selling an NVL72 rack is like selling the entire fully assembled race car. It's a complete system, with dozens of chips all connected together with their super-fast NVLink technology, which basically lets all those chips talk to each other without any bottlenecks. It's what you need to build these massive AI models. And that's exactly what the hyperscalers are buying. They've already signaled they're going to spend something like $320 billion on AI and data centers this year. So any commentary on how the NVL72 shipments are progressing or how strong the order backlog is will be scrutinized. It's the tangible proof that this AI boom is not just talk, it's translating into massive real-world infrastructure builds. It's the difference between someone saying they're hungry and them actually placing a catering order for 100,000 people. Now, on the other hand, If that guidance comes in at say $53 billion or less, that's when you'll see the mood shift. It will feed the narrative that maybe, just maybe, this historic explosive growth is starting to normalize. There are a couple of other things worth keeping an eye on, sort of like secondary characters in a play. The first is gross margin. It dipped a little recently because of some charges related to their H20 chip, which was designed for China. The market wants to see that margin get back to around 72% this quarter. And more importantly, they want to hear that it's on a clear path back to the mid-70% range later this year. It's a key indicator of their pricing power. And the other big wildcard in all of this is China. The whole situation is, well, it's as messy as a cat trying to get out of a wet paper bag, or at least that's what the recent media propaganda is trying to sell you. You have US export rules, a potential 15% revenue sharing deal just to sell there, and now reports that Beijing is actively discouraging its own companies from using Nvidia chips. So, the big question is whether Nvidia will even include potential sales to China in their guidance. Most analysts I've seen expect them to play it very safe and conservative, excluding China from the forecast entirely. They'll want to emphasize how strong the demand is everywhere else in the world. If they do happen to include China, it could add a few $1 billion to that top-line number. But everyone knows it's a very uncertain few billion. Okay, so we have our fundamental scorecard. We know the number that matters and the story we're looking for. Now let's pull up the chart and talk about the technical picture. This is where we map out the what-if scenarios. It's less about predicting and more about, well, knowing where the floor is if things go wrong and where the ceiling might be if they go right. Right now, as of Tuesday's close, the stock is sitting at $181.77. That's just a whisker away from its all-time high of $184.48. The overall trend is incredibly strong. All the important moving averages are stacked up underneath the price, acting like a series of safety nets. But here's the part that I find most telling. The stock has gotten very, very quiet over the last couple of weeks. The daily price swings have compressed. In technical terms, we call this a squeeze. It signals that a big, explosive move is building up, and Wednesday's earnings report is the perfect event to unleash it. The only question is, which direction? So let's game this out. There are really three paths this could take after the numbers are released. Path number one, the dream scenario for bulls. Nvidia comes out, beats expectations, and guides for that $55 billion or more. The commentary on Blackwell is glowing. In that case, the first level to watch is that all-time high around $184.50. If the stock breaks through that level with a lot of trading volume, and that volume part is important, then the next projected targets could be up around $194 and maybe even a test of $200. And for anyone who might already be holding the stock, if you see that kind of powerful move up towards that $194 or $200 zone, it's often prudent to consider trimming the position a little. It's not about being bearish, it's just disciplined risk management. You know, you can't go broke taking a profit. It's like a cat who's caught a particularly big bird. It's wise to enjoy some of it right away rather than risk having it get away. Path number two, the good but not great report. This is where they beat, but the guidance is just okay, maybe in that $53 to $54 billion range. You might see an initial pop, maybe it even briefly touches a new high, but then it could fade as the big money decides the news wasn't exciting enough. If that happens, I'd be watching for the stock to find its footing and support somewhere between $174 and $177. And finally, path number three, though unlikely, a miss. The guidance is weak, or there's some other negative surprise about margins or China. This is where things could get messy fast. The first real line of defense on the chart, the first major support level, is around $172. If that doesn't hold, you could see a quicker drop down towards below the $168 zone. Now, a very important word of caution on this scenario. If the stock does gap down hard, you will almost always see a quick reflexive bounce. It's tempting to try and be a hero and buy that first dip. I would strongly advise against it. That first bounce is often a trap where institutions are using the brief flurry of buying to unload more of their shares. The smarter play is to be patient. Avoid that first bounce, let the dust settle, and wait to see if the stock can build a proper foundation of support at a lower level before even considering a move. So, you have the three basic paths. It's not about guessing which one will happen. It's about having a plan for each one, and remember, the numbers are only half the story. I'll be listening very closely to the conference call afterwards. I want to hear what they say about the Blackwell supply chain, what the real demand from the big cloud companies looks like, and of course, any real color on the China situation. That's where you get the context behind the numbers. So that's the game plan. It's all about connecting the dots between the company's performance and the stock's price action. We've covered a lot of ground here, and I hope breaking it down this way was helpful. If you want to see more of this kind of no-nonsense analysis, and you haven't already, please do consider subscribing to the channel. It helps me know that this is actually providing some value to you. Alright, DataCat out, stay sharp and stay safe out there.